Headlining on Breakingviews this morning, Lloyds banking group could be the first UK bank to claw back bonuses, and UPS's proposal to buy TNT Express shows TNT was right to split up with Post NL. Chris Hughes is with me. Chris, this Lloyds clawback story, it's all over the UK media, of course, this morning. Just want to get one thing straight here, because you talk about a malus, M-A-L-U-S, in your headline. I want you to explain what that is in a minute. A clawback, the definition, is a bonus that's deferred rather than immediately available. What is happening at Lloyds?
Well, let's be clear. After the financial crisis, the regulators stepped in and said, look, we don't want bankers to be able to take big risks, get a big bonus for the short-term gains from those actions, and then when things go belly up, we've got no way of penalising them. So the idea was that a certain portion of bonus would be sort of set to one side, actually awarded, but not actually paid out. And then if history turned out to show that the bonus wasn't really deserved, you would then claw it back. And the malus is simply a sort of, jargon way of talking about a kind of anti-bonus where the payment goes the other way. Now, so what's going on at Lloyds? Well, it looks like we've got the first instance of this at a UK bank where you've got the ex-CEO and other board members having their 2010 bonuses, which obviously were subject to the sort of post-crisis clawback regime.
And this is directly as a result of the mis-selling of the payment protection insurance.
Well, this is where we have slightly mixed feelings about this. It's not clear precisely what the rationale is here. Now, the central issue is this mis-selling of sort of mortgage payment insurance that Lloyds was getting into. It would sell a home loan at the same time. It would bundle it up with a sort of insurance premium if you lost your job and couldn't pay the mortgage. And this was deemed to be mis-selling. And last year, if you recall, the new CEO took a massive $3 billion plus charge against the mis-selling of this product. Now, the difficulty we've got is that we know that this mis-selling was going on actually from sort of 2007 onwards, from Lloyd's own statement. So it's not clear precisely what the board is getting at in clawing back this bonus. The worry is that because it's only got access to the 2010 bonus pool, it's kind of raiding that, but for sins actually committed previously.
And this is George Hayes' point. Any arbitrary application for pre-crisis sins is going to be problematic for the bank.
Well,
or should be problematic.
Well, it's difficult because overall you think, well, are these bonuses really deserved given what happened? And you have to say, well, no. So from a sort of common sense point of view, you think it's right that bonuses are called back. But in the detail of the application, the worry would be that actually there's clawbacks going on here over and above what was right for, say, the 2010 year, but they're just raiding the 2010 bonus pool to get back at things that were kind of awarded before the whole clawback concept came about. So it's from a common sense point of view, you can defend it, but you have to worry about the detail of the application.
All right, very quickly, UPS, TNT, a good offer but not enough is your call.
Well, look, it's a 43% premium to the previous close, but still, it's actually below the share price when TNT demerged from PostNL last year. So whether it's enough to actually satisfy some pretty disgruntled shareholders at TNT is another matter. Now, the shares are already trading above the offer price, and the synergies available from this combination are huge. Supposed to be absolutely massive.
And of course, FedEx could get in on the deal, right?
Well, possibly.
Or FedEx.
Whether FedEx's balance sheet could really muster up a competing cash offer is debatable. But the synergies on offer here are huge, and that the market is basically saying to UPS that we know that by consolidating the ground and air fleets of these two massive couriers, there's lots of savings to be had, and we know that you can probably afford to pay more. So the market is saying, regardless of a counter bidder, we expect to see a little bit more value here, but not an entirely unexpected deal.
All right, Chris, many thanks for that. Chris Hughes. If you want to watch our US Breakingviews show, that's on every day, 12:30 Eastern, 17:30 GMT. Of course, you can find that that link on the Breakingviews site as well. I'm Axel Threlfall. This is Reuters.